Welcome to the deep dive. Okay, it's July 4th, 2025, and wow, the global news cycle has just been relentless, hasn't it?
Absolutely buzzing, nonstop.
So, today, our mission really is to cut through all that noise. We want to pull out the most important, maybe even surprising, bits of knowledge from what's happening right now.
Uh-huh.
And we're using a pretty unique source of the top 10 global news stories from just the last 10 hours, curated by Editorial Cartoons AI.
Right.
The goal here is simple. Give you that shortcut to being genuinely informed,
Right.
highlighting those connections, the crucial stuff you might otherwise miss in the flood.
Exactly. And it's more than just headlines flashing past. That's key.
Right.
These aren't just isolated events. Think of them like interconnected pieces. It's a big, dynamic, global puzzle we're looking
A
at.
puzzle. Yeah, I like that.
And we're trying to help you understand not just what happened in these last few hours, but really why it matters. What's the bigger picture? What does it imply for, how you see the world?
Okay, let's unpack this first big ripple then. It really shows how connected everything is.
It really does.
You might think, okay, one economic report, one country,
Yeah.
how much impact can it have? But wow.
Yeah. The ripple effect is real.
So, case in point, India's rupee, it slipped back a bit to around 85.50 against the US dollar.
Easing off that recent high.
All right, off a 1-month high. And this happened like immediately after some unexpectedly strong US jobs data came out.
Boom. That just deflated those hopes for a Fed rate cut, didn't it?
Instantly. And we also saw dollar rupee forward premiums ease up too. Plus, traders are definitely keeping an eye on that looming tariff deadline, July 9th.
Oh, yeah, that's hanging over everything,
Yeah.
affecting potentially, 100 nations?
Yeah, about 100 nations. It's huge.
And what's fascinating here, I think, is just how fast those global expectations about central banks can pivot,
Lightning fast.
and how tangled up that is with the wider trade worries. It just highlights how markets are constantly trying to price in future moves, future policies. It's not just about today's numbers.
So it's the anticipation that's moving things.
A huge part of it, yes. How the Fed might act or not act has these immediate global currency implications, like we saw with the rupee.
Okay, but here's where it gets really interesting, almost counterintuitive maybe. Despite that solid U.S. jobs report, the dollar itself didn't just keep climbing. It actually reversed some of its earlier gains.
Right. Which seems odd at first glance, doesn't it?
Yeah.
Good news for the U.S. economy, but the dollar dips.
Exactly. Why the sort of head scratcher? Well, it seems this happened because the shadow of Trump's proposed, $3.4 trillion mega bill?
Massive spending bill, yeah.
That plus the ongoing tariff risk just kind of hung over the markets, pulling the dollar back down.
So if we connect this to the bigger picture, what it really tells us is how intensely sensitive markets are right now, not just to the economic fundamentals like jobs data, but also to the perceived political risks, the trade risks. It's like the narrative, the potential future policies, can actually outweigh the current good news.
The story matters as much as the stats.
Sometimes more, it seems. It's about what could happen next with spending or tariffs.
And these tariff fears, they're not just a currency thing. They're clearly hitting European markets, too, hard.
Oh, absolutely. You saw that slide in European stocks.
Yeah, EU equities dropped nearly 1%, the STOXX 600 sliding, and it's directly linked, isn't it, to those fears about the U.S. tariffs coming on July 9th.
Directly. And look at the sectors leading the losses: banks, mining. These are areas really exposed to trade shifts and economic growth worries.
So it really demonstrates that widespread anxiety around trade policy.
Totally. Just the idea, the anticipation of tariffs is enough to make investors shuffle their positions significantly. They're thinking about corporate earnings, economic growth across the whole region.
It's like the market's playing chess, thinking moves ahead.
Precisely. Pricing in consequences before the event even occurs.
And speaking of global markets, another big one, oil prices. They also saw a bit of a dip.
Brent crude slipped.
Yeah, down to around $68.58 a barrel. This followed comments from Iran reaffirming its commitment to the Non-Proliferation Treaty.
Right, the NPT commitment.
And also the market kind of anticipating an OPEC plus output increase.
So again, you see that delicate balance, right, in energy markets. It's influenced by these high-level geopolitical things like Iran and the NPT,
Yeah.
and also by the very real supply and demand dynamics managed by groups like OPEC plus Lobo. It's this constant, complex interplay. policy on one side, production on the other.
So putting it all together,
Yeah.
what's the overall market vibe right now? What does this mix tell us?
Jittery seems like the right word.
Yeah, jittery. Global markets are definitely cautious, waiting for that July 9th trade deadline, waiting for more U.S. jobs data, the Fed's meeting minutes.
Everyone holding their breath a bit.
We've seen Asian stocks kind of mixed. European futures were down. It's just, it's a cautious environment. Every piece of news is getting looked at very closely.
Very closely indeed.
Okay, now let's zoom in a bit. Let's focus on India specifically. It's such a dynamic, rapidly evolving economy, always something interesting happening there.
Always. Fascinating place to watch.
So first up, the Reserve Bank of India, the RBI. They just launched this huge 1 trillion rupee reverse repo auction.
Whoa, 1 trillion. That's significant.
Yeah. Basically, the central bank is borrowing money back from commercial banks for 7 days. Why? To soak up this record amount of extra cash floating around the system.
Surplus liquidity, right. Highest in years.
Highest in 3 years, yeah.
Right.
And that extra cash was pushing short-term interest rates down, maybe too close to the lower end of the RBI's target.
So this is them stepping in to manage that.
Exactly. It's like they're draining the swamp a bit, trying to keep those short-term rates aligned with their policy objectives. It's a clear signal they're actively managing things.
And what's really interesting there is seeing a central bank actively fine-tuning liquidity like that. It's not a blunt instrument. It's quite precise.
Right.
It shows they're really trying to steer the financial system carefully, keep rates where they want them, likely thinking about inflation down the line, too. It's a sign of confident economic management, I'd say.
And despite those currency wobbles we talked about earlier, India is still proving to be a magnet for foreign investment. They just saw their 3rd straight month of inflows from foreign portfolio investors, FPIs.
3rd month. It's a solid trend.
It is. Foreign investors pumped in, 145.9 billion rupees. That's about 1.05 billion US just into Indian stocks in June.
Wow. And where did it go? Mostly specific sectors?
Yeah, heavily skewed towards financials and, interestingly, oil and gas. And the drivers seem to be attractive valuations, plus maybe the effect of those earlier RBI rate cuts making things look good.
So putting that into context, it really shows there's still strong international confidence in India's growth story, doesn't it?
Seems like it, yeah.
Especially in those key sectors. And the fact that this is happening even with all the global economic jitters we've discussed.
Right, despite the uncertainty elsewhere.
It just underscores how impactful central bank actions like those earlier rate cuts can be. They can really boost investor sentiment, pull in capital, even when the global picture looks a bit shaky, creates opportunities.
But it's not all positive inflow news coming out of India. There's also a pretty significant regulatory story making waves.
Oh, what's that?
India's market regulator, SEBI, they've just barred a big U.S. quant firm, Jane Street.
Jane Street, the big trading firm. Wow.
Yeah, barred them from the domestic markets. The allegation is about derivatives manipulation.
Okay, that's major news in the financial world.
Definitely. And the immediate effect. Sharp drops in the stocks of Indian brokers like Angel One and BSE, kind of a ripple effect within their own market.
Well, this incident, it really brings up an important point about financial regulation, doesn't it?
Oh, so?
Well, it's global reach. A regulator in India taking action against a major U.S. firm.
Yeah.
It shows how interconnected regulation is becoming.
And the immediate impact it can have on market players, even those not directly involved, like the brokers.
Exactly. And it's also a pretty stark reminder, I think, of the vigilance needed to keep markets, clean, to maintain integrity. It signals that regulators are watching and they're willing to act decisively, no matter how big the firm involved might seem.
A real shot across the bow. Okay, let's shift gears now. Let's turn our attention to some of the more immediate sort of ground-level events shaping the geopolitical landscape, where things get very real very quickly.
Right, the security dimension, always critical.
And we saw a really significant move here. Russia launched what reports are calling its largest drone attack yet on Kyiv.
Largest yet. That's saying something, given the history.
Yeah, the scale sounds immense. Around 550 drones plus 11 missiles, described as the heaviest aerial assault so far.
And the impact?
Well, reports say it injured 23 people and also damaged the Polish consulate there in Kyiv.
Damaging a consulate, too.
And here's a potentially interesting wrinkle. The timing. This happened just hours after that phone call between Putin and Trump.
Oh, that is interesting timing. Hours after their call.
That's what the reports indicate.
Well, the sheer scale of that attack is obviously significant. But combined with that timing, it inevitably raises questions, doesn't it? About the strategic messaging. What signal was being sent? Was it a show of force, a response to something, a message timed deliberately close to that high-level diplomatic contact?
Hard to know for sure, but the timing certainly makes you think.
It definitely speaks to the ongoing, complex and very high-stakes tensions that are still defining that entire region.
And maybe in direct response to these kinds of ongoing security worries, we're seeing Germany possibly making a pretty big shift in its military policy.
Germany, what are they considering?
Reports suggest Berlin is looking at potentially reinstating a 6-month voluntary military service scheme.
Voluntary service,
Yeah.
reinstating it.
Yeah.
Yeah.
The idea seems to be to bolster their military reserves, specifically because of these heightened concerns about regional security, especially following Russia's actions.
Okay, that's a potentially major shift for Germany. Voluntary, but still a step towards rebuilding reserves through service.
If we zoom out on that one, it really underscores how these geopolitical tensions, these security fears, they directly influence national decisions, don't they?
Absolutely. They force nations to fundamentally reevaluate their defense posture, their capabilities.
Even how the public gets involved in military service.
Exactly. Countries are clearly adapting their core defense strategies based on the threats they perceive. And this German move, if it happens, could signal a much longer-term shift in European defense thinking.
So, after covering all that ground finance, trade, regulation, geopolitics, what does this all really mean for you trying to navigate this, well, pretty complex world?
That's a lot to take in for sure.
We've just unpacked this fascinating cross-section, right? All
Yeah.
drawn from just the last 10 hours of news. And what seems crystal clear, at least to me,
Yeah.
is just how deeply interconnected everything is. Even things that seem totally separate on the surface.
Couldn't agree more.
Like, a jobs report over here impacts currency way over there. Political talk about tariffs shakes markets across an ocean. Geopolitical moves lead directly to countries rethinking their armies. It's all linked.
You can genuinely see the threads, can't you? How economic policy, those trade talks, the military actions, they're all part of this bigger, constantly shifting global tapestry.
Tapestry, yeah.
And it influences everything from the stock market tickers you see right down to national defense strategies. Understanding those connections, that's how you move beyond just reacting to headlines.
That's how you start to grasp the bigger forces at play.
Exactly.
So here's a final thought to leave you with as you go about your day. Maybe consider how these big macro trends we talked about, shifting tariffs, central bank moves, changing military policies, how might they actually connect, maybe in surprising ways, to the industries you follow?
Good question.
Or to the broader economy, or even just the daily prices you see, the political chats you overhear. The deeper connections, they're almost always there if you take a moment to look for them.